We're talking about Madden 24. As I mentioned, I play this game. I really enjoy it. Very popular title for EA. Big day for the company, but what does it mean for the investors? Does this actually give a boost to the stock?
Yeah, so the nice thing about these sports games from an EA perspective or from an investor's perspective is they tend to be quite consistent. Unit sales tend to fall within a pretty defined range mostly every year, and that's for FIFA or EA Sports FC, as it's now called, Madden, NHL, and the rest of EA's sports portfolio. Where you really get some of the growth out of these game launches and these stocks eventually is the in-game spend opportunities that you can get, especially in Madden, where you're collecting player cards for players that you can use in your online matches. And EA always coming up with new and innovative ways to get people to spend in game, which I think is where investors are really focused at this point.
All right, speaking of investors, you've been watching the basket of video game stocks. You say they're underperforming the S&P over the last year. You're also looking at some alternative data and also Twitch. That's the social media site where you actually watch other people play video games. I never quite understand that. But what trends are you seeing when it comes to engagement, when it comes to some of the major publishers? We are talking about EA, Take-Two, Activision, Blizzard, even Ubisoft.
Yeah, so we've seen Twitch engagement actually kind of soften since the heights of the pandemic, and that's even still coming down slightly year over year. However, when we actually get the actual results from the video gaming publishers, engagement tends to be quite strong. So what that's saying to us is there's still quite a lot of interest in video games, and more interest in video games now than there was prior to the pandemic. Whereas people used to engage passively through watching other people play and actively, now people are spending their time maybe in different ways and choosing more of the active engagement, actually playing the games themselves rather than passive. Although passive engagement still does hold up well, and it is one of the key ways in which publishers and streamers both reach audiences.
You know, right now we're showing the audience a graphic. It's a $385 billion industry when we talk gaming right now. So it's not just child's play. We think of it as kids or people in their basement playing, but it's really big business. So I want to talk to you about a big business deal. Microsoft's goal to acquire Activision Blizzard, basically $68 billion deal. It looks like after a few regulatory hurdles, it might go through. What does that mean for the broader industry and some of these other companies in the space to have Microsoft purchase one of these big publishers?
Yeah, as you mentioned, it's our view at Raymond James here that we believe that this acquisition is now likely to close now that the UK is taking a more accommodative stance to the deal. And what it means to the rest of the space is now you start to see those big numbers start to be attractive to big tech companies, to big media companies, anybody who has IP or wants exposure to the video gaming landscape. Those other companies, the other independent players in the space do start to look interesting because they are driving real results and have real products behind them.
So we were talking about video games generally, we're talking about the publishers, and they're lagging the market overall, but you're saying there's some other names that are really winning. Some names we don't really talk about a lot. Give us a sense of the video game stocks that are successful right now, or at least their stock prices are successful, and what do they have in common? Is there something different from an EA or a Take-Two?
So now I think whereas in the past couple of years, a lot of these stocks have traded on some of the dynamics around the pandemic, a lot more exogenous factors. Now we think we're starting to return to more of a normalization on things like engagement trends, things like the performance of a release when it actually hits market. And so given that, now we start to look at forward pipelines for companies and how they might be interesting for the stocks. EA and Take-Two kind of have both pointed investors not toward this year so much, but toward next year, where both companies expect a step up in bookings. In Take-Two's case, a substantial step up in bookings. So we like EA in the more near term because of the consistency. As we spoke about, EA Sports FC, Madden, quite consistent releases with growth in that live services component. Take-Two tends to be a little bit farther down the road with a signal of a major step up in bookings next year. People are kind of reading between the lines on that it could be a Grand Theft Auto release.